Chapter: No importance of banking, need role. Definition of banker. According to Section 3 of the Negotiable Instruments includes acting as act, the term banker person a corporation or a company a banker. Definition of bank equals according to Section 5(3) of Banking Regulation Act banking may be defined as accepting for the purpose of lending and investment of money from the public, s. repayable on demand order and withdrawable by check, draft order or otherwise. Definition 201 of customer. According to Sir John Paget's, to constitute a customer there must be some recognizable habit of dealing in the nature of regular banking business. The importance of banking are: 1. Acts as an intermediary. 2. Economic development. 3. Capital formation 1099. 4. Services to business law. 5. Reduces use of currency. 6. Mobilization of savings Notre Dame and 7. Raising the standard of living of 8. Benefits of rural economy 3 and 7. 9. Balanced regional development 10. Facilitates foreign trade. Introduction to banking. Date. Page 1. Acts as an intermediary. Intermediary BW people having surplus. It acts as in money and those requiring money for various business activities. 2. Economic development. It, banks, helps in economic development by providing credit to farmers, small-scale industries and self-employed people as well as to large business houses. Famers. Small-scale, large-scale. 3. Capital formation. Deposits accepted by banks are converted into loans and advances for industrial and trading activities to BLS orgs. This way, banking converts savings into capital formation. 4. Services to business. Banking helps BLS phone through a variety of services like providing long-term and short-term finance and collection of checks and bills, etc. and ABO in raising of capital to BLS. DLA BITO. 5. Reduces use of currency. Banks enable depositors to make payment by check, debit cards, credit cards, etc., issued by banks instead of liquid money. Hence it. 6. Mobilization of savings. Banks allow savings to be deposited in different types of accounts like current all, savings ALC, fixed deposit ALC, etc., carrying different int rates. And 7. Raising the standard of living. It helps in raising the standard of living of people in general by providing loans for purchase of consumer durable goods, houses, automobiles, etc. Hence it. Bank. 8. Benefits to rural economy. Rural branches of banks play a useful role in mobilizing savings in rural areas and provide loans to framers at low interest rates and on priority basis. DREDSO. 9. Better development. Balanced regional development. Banks identify backward regions and identify areas that need special assistance for industrial development and help them by providing adequate funds at reasonable rates. 10. Facilitates foreign trade. Banks also facilitates import and export transactions through foreign countries for the economic development of the India. 9. Primary, secondary and modern functions of banks. Right pointing arrow. Definition of bank. Definition of customer. The primary, secondary and modern functions of banks are: 11. Primary functions. A. Accepting of deposits. B. Lending of money. 2. Secondary functions. 3. Modern functions. 1. Primary functions. A. Accepting of deposits. Banks accept various deposits from its customers as deposits are an important source of banks' funds, and they are classified into 3 types: saving deposits, these are the small Interest in deposits or amounts accepted by the banks to encourage person savings. Fixed deposits. These are the big deposits or love.fa amounts accepted by the banks for fixed period of time and repayable on maturity. Winking face. Current deposits. These are the deposits or amounts accepted by the banks for paying all checks and bills drawn by the customers. B. Lending of money. The major portion of the deposits received by the banks is lent out. Interest earned from lending is the main income of the bank, however it is risk a banker must take. All precautions in this process and types of lending are 1. Loans in credit smiley face. Overdraft. IV. Discounting and purchasing of bills. Lage 2 Enion. 2. Secondary functions. 9. Collection of drafts, bills, checks etc. on behalf of customers. B. Execution of standing orders of customers. 9. Conducting of stock exchange transactions. 9. Functioning as an executor, trustee of an estate of a customer. Sef. 03. Modern functions. 9. Accepting valuables for safekeeping. D. Providing specialized advisory services to customers. 9. Issue of credit cards. Na. 2. Issuing of traveler's checks. Brow. 2. Merchant banking. Et brow. Origin of banking. Definition of bank. Definition of customer. Since the banking activities were started in different periods in different countries, there is no unanimous regarding the origin of the word bank. View. The word banks is said to have derived from the French word banco or banquis or bank means a bench or bank which. In fact, the early Jews in Lombardy transacted their banking business by sitting on benches. When their business failed, the benches were broken and hence the word bankrupt come into vogue. Another common held view is that the word bank might be originated from the German word Stockfund. Bank, which means a joint relationship between a banker and a customer. 1. General relationship. A. Primary general relationship. 1. Subsidiary general relationship. 2. Special relationship. 9. Objeler obligations. Rights. I. General relationship. 1. Primary general relationship. The primary general relationship arises from a contract. BLW the two banker and a customer. So, it is a contractual G relationship. It is governed by the various terms of agreement BLW the two parties. 9. Banker money is only a debtor in respect of customers. B. Customer is only general creditor of the banker. D. Demand for repayment of deposits is necessary. 2. Subsidiary general relationship. After creating an account in bank by a customer and there exists debtor and creditor relationship, but this does not mean that there cannot be other relationship. There are subsidiary general RIP also. 9. Bailee and bailor. B. Trustee and beneficiary. 19. Agent and principal. Special relationship. It refers to the special obligations and rights of the banker against the customer and vice versa. The rights and obligations are reciprocal. I. Customer's rights are banker's duties and banker's rights are customer duties. 1. Obligations. 9. Banker's obligation to honor his customer's checks. 1. Banker's obligation to maintain the secret of the customer's account. Rights. A. Right of general lien. B. Right off set off banker's right to combine. 9. Banker's right to charge compound interest. 9. Banker's right to charge incidental charges. E. Banker's right of appropriation. Types of banks in India. Definition of bank. Definition of customer. The types of banks in India are 1. Central bank. 2. Commercial banks. I. Public sector banks. E. Private sector banks. Foreign banks. 3. Development banks. 4. Cooperative banks. 5. Specialized banks. I. Exim Bank. SIDB. NABARD. No, not evils. 1. Central bank. Central bank is which is responsible for guiding and regulating the banking system of a country. It does not deal with the general public. The RBJ is the central bank of our country. 2. Commercial banks. Commercial banks are banking institutions that accept deposits and grant short-term loans and advances to their customers. They also medium-term and long-term provide loan. 9. Public sector bank. In case of public sector banks, majority of share capital is held by RBI. Examples: SBI, Corporation Bank, Bank of Baroda, Canara Bank, Bank of India, etc. B. Private sector banks. In case of private sector banks, majority of share capital is held by private individuals. Examples: Assisi Bank Limited, Bharat Overseas Bank Limited, Global Trust Bank, etc. Foreign banks. Foreign banks are registered and have their headquarters in a foreign country but operate their branches in our country. Examples: Hong Kong and Shanghai Banking Corporation, HSBC, Citibank, etc. 3. Development banks. Development banks provide financial assistance in the form of medium and long-term capital for purchase of machinery and equipment. Example: Industrial Finance Corporation of India, IFCI, and State Financial Corporation, Reg. 4. Cooperative banks. Cooperative banks are formed by persons belonging to the same local community under cooperative societies Act. The society has to obtain a license from the RBI and follow all guidelines of 5. Specialized banks. Banks, which provide overall support for setting up business in specific areas of activity, are called specialized banks. Examples: Exim Bank, B2B SIDBI, and NABARD, etc. At Export-Import Bank of India, Exim Bank provides the required support and assistance to set up a business for exporting products abroad or importing products from foreign countries. B. Small Industries Development Bank of India, STDBP, STDBI provides finance to establish a small-scale business unit or industry, by way of loan on easy terms. The main aim and focus of SIDBI is to promote, finance and develop small-scale industries. C. National Bank for Agricultural and Rural Development, NABARD. It is a central for financing agri, rural and rural sectors like handloom, weaving, fishing, etc. NABARD provide credit both short and long-term basis. Bankers lending. Steps in bank's lending process. Meaning of bank lending. When people or groups like banks lend you money, they give it to you and you agree to pay it back at a future date, often with an extra amount as interest. The steps in bank's lending process is 1. Evaluating finding prospective loan customers. 2. Evaluating a prospective customer's charter EP. Sincerity Gov. 3. Making site visits and evaluating a prospective customer's credit record. 4. Evaluating a prospective condition, customer's financial. 5. Assessing possible loan collateral and signing the loan agreement. 6. Monitoring compliance with the loan agreement and other customer service needs. Types of loans. Meaning of banks lending. The types of loans are 4. Based on the security. 2. Based on the purpose. 3. Based on the assets. 1. Based on the security. A. Secured loans. These are the loans when the borrower take the loan from bank by giving or keeping some collateral asset. If borrower is unable to repay, then bank reserves right to utilize the collateral asset for recover of money. B. Unsecured loans. These are the loans given by bank to the borrower without collateral asset. But the bank analyzes the past relationship with the borrower, the credit score, so other factors before lending in this way. 2. Based on the purpose. 9. Education loan. Education loans is given to the students for pursue education. The course can be UG, PG or other any course the bank provide loan by take the admission pass or certificate provided by institution or board. 5. Personal loan. Whenever there is a liquidity issue, the banks provide personal loan, and it is used for going vacation, to pay down payment of a house, car, and medical emergency, etc. It is planned by credit score of the borrower. Vehicle loan. Vehicle loan is the purchase of FWO wheeler and four-wheeler vehicles. Based on the road price of the vehicle, amount will be given by the lender. The vehicle will be owned by the lender until full repayment is made. B. Home loan. Home loans are dedicated to receiving funds in order to purchase a house, flat, or repair the existing one. Property will be held by in this case the lender, and transferred ownership after completion of all payments. 3. Based on the assets. 9. Gold loan. Gold loan is the loan which the bank gives loan to borrower by taking gold, and the borrower can repay money in monthly, and after all payments he can take back to his custody gold. B. Loan against assets. It is similar to gold, as individuals and businesses property, insurance policies, FD certificates, mutual funds, and other assets will be kept in bank in order to borrow money. Date, page, and growth of commercial banks. Changing role of commercial banks. Right pointing arrow definition of bank. Right pointing arrow definition of customer. The changing role of commercial banks are: 1. Better customer service. 2. Mobile banking facility. 3. Bank on Wheels scheme. 4. Portfolio management. 5. Issue of electromagnetic cards. 6. Universal banking. 7. Automated teller machine, ATM. 8. Internet banking. 9. Encouragement to personal loans. 10. Social banking. 1. Better customer service, UATS. Banks in India have now become very customer service focused. Their service become quick, efficient, say customer friendly. This is because of rising competition from new private banks. 2. Mobile banking. Under mobile banking service, customer can easily carry out major banking transactions simply using their cell phone mobiles. A customer if registered his phone no. In bank he will be provided username and password. 3. Bank on Wheels scheme. Under this scheme, banking services are made accessible to people staying in the far remote areas of India and serves banking needs of rural area. Date, page, equals 6, 7,024,170. 4. Portfolio management. In Portfolio Mag, banks do all the investments work of their clients in shares, debentures, fixed deposits, ETI, and charge them a fee for this service. 5. Issue of electromagnetic cards. Banks provide e-magnetic cards to their customers. These cards help to carry out cashless transactions, make online payment, book railway ticket, etc. E9. Reddit cards. 6. Debit cards. 9. Kizan credit cards. 16. Universal banking in India. The concept of universal banking has gained recognition after year 2000. The customers can get all banking and non-banking services under one roof. 7. Automated teller machine, ATM. Many banks have opened up ATM contrays to offer convenience to their customers. Now banks are opening ATM contrays not only in their branches but also at public places like airports, railway stations, etc. 8. Internet banking. Internet banking is also called as an e-banking or net banking. Here, the customer can do banking transactions through the Internet World Wide Web, www. The customer need not visit the bank's branch. 9. Encouragement to personal loans. Today, the purchasing power of Indian consumers has increased dramatically because banks give them easy personal loans. Generally, interest charged by the banks on such loans are low. History of RBI. The Reserve Bank of India was established under the Reserve Bank of India Act of 1934, which was privately owned initially. It was nationalized in 1949 and since then fully owned by the Ministry of Finance, Government of India (GOZ). At the time of establishment, the authorized capital of the RBI was 75 crores. The Gov's share in this was only 220 to 22 lakhs. Headquarters, Mumbai, Bombay, Maharashtra, India. Established. Street, the 1st of April 1935, 87 years ago. Ownership, Ministry of Finance, Gov. of India. Governor ISS Shaktikanta Das. Website of RBI, rbi.org.in. The present governor of RBI is Shaktikanta Das. The first governor of RBI was Sit Osborne Smith. The first Indian governor of RBI was Sir C.D. Deshmukh. Functions of RBI. Meaning of RBI. RBI is the bank which is responsible for guiding and regulating the banking system of a country. It does not deal with the general public. The central RBI is the central bank of our country. The functions of RBI are 11. Issue of currency. 2. Banker to Gov. 13. Banker to bank. 4. Custodian of cash reserves of commercial banks. 5. Custodian of country's foreign currency reserves. 6. Control clearance and accounts settlement. 7. Controller of credit. Tech. 2. 4. Issue of currency. Under Section 22 of the Reserve Bank of India Act, the bank has the currency sole right to issue banknotes of all denominations. The Government of India makes only note 1 rupee in coins and RBI distributes all over the country as agent of the government. 2. Banker to government. The Reserve Bank is an agent of Central Gov and all state governments in India, except that of Jammu and Kashmir. The RBI makes loans and advances to the states and local authorities. 3. Banker to bank. The banks of the country are required to keep a certain percentage of their deposits with the central bank, and in this way the central bank is the ratio ultimate holder of the cash reserves of commercial banks. And banks can also borrow on eligible securities. 4. 14. Custodian of cash reserves of commercial banks. The commercial banks hold deposits in the Reserve Bank and the latter has the custody of the cash reserves of the commercial banks. 5. Custodian of country's foreign currency reserves. The Reserve Bank has the custody of the country's reserves of international currency, and this enables the Reserve Bank to deal with crisis connected with adverse balance of payments position. 6. Control clearance and accounts settlement. Since commercial banks have their surplus cash reserves deposited in the Reserve Bank, it is then easier to deal with each other for the control clearance and accounts settlement. And now see borrowing of accounts is essential function of RBI. 4. Controller of credit. Credit is controlled by the RBI in accordance with the economic priorities of the government. There are 2 measures. 1. Quantitative method. 2. Qualitative method. 9. Bank rate. 1. Cash reserve ratio, RR, 1. 9. Margin requirements. Direct action C. Statutory liquidity ratio, SLA. Moral suasion. 9. Repo rate. Principles of sound and lending. Meaning of bank lending: when people or orgs like banks lend you money, they give it to you and to pay it back at a future date, often with an extra amount as interest. You agree. The principles of sound lending are: 1. Safety. 2. Liquidity. 3. Purpose. 4. Profitability. 5. Security. 16. Diversification. F. Margin. 8. National interest. 1. Safety. The banker should ensure that his funds will come back to him in the normal process without taking any legal action. The borrower should have good credit standing. 2. Liquidity. It is the capacity of the banker to repay the deposits on demand. He should see that the funds which are given as loans will come back to him as quickly as possible. B. Purpose. Before giving loans and advances, bankers should see for what purpose the borrower needs loans and advances. If purpose is productive, it is easy for the banker to get back the amount, and he should not give loans for illegal activities. 4. Profitability. A traditional commercial bank is essentially a profit-making institution, so it has to employ its funds' profitability to meet its expenses and to pay dividends to its shareholders. 15. Security. Banker should take some assets as collateral security, and he should take only those which are having fixed value, price, and which can be efficiently managed. 6. Diversification. Banker should spread his and advances over a large number of borrows, over to good number of industries, over geographic area, and over different types of securities a wide. 7. Margin. While giving the secured loan, banker gives loan for an amount which is less than the realizable value of the security. The difference BW, the realizable value of security in the loan sanctioned, is called margin. Banker should maintain good AMT of margin. 8. National interest. He should give more interest to key sections. Key sections means like agriculture. He should give more advances for productive purpose, which will increase employment opportunities and standard of living.